The 7 best Vanguard funds for retirement, according to U.S. News and World Report. So let's take a gander at my dogs, ouch, as he's biting my hand, and then see what they got to say. It'd be interesting for you because, I like Vanguard, I like retirement, I like when we have clickbait titles like the 7 best. It's always good to get you guys to watch and me to get that sweet, sweet YouTube money. All right, Rebecca Lake and Corianne Hicks. So who are these people? She's been writing about personal finance for nearly a decade. In addition to covering credit cards and investing for U.S. News, she's a regular contributor to creditcards.com. All right. And Corianne is an investing and personal finance journalist specializing in women. I specialize in men. Can you imagine? I specialize in women. Jeez Louise. Why would you put yourself in that clique or that cliche? I just mix of choices for investors. Mutual funds can help diversify your retirement portfolio, whether you're looking for growth through equity exposure or dividend income. Vanguard has a reputation for low-cost stuff and exchange-traded funds to help investors achieve their retirement goals. Other brokers offer similar funds, but few can claim the record that Vanguard has earned. All right, so let's take a look here. The total bond index. Whoa. Dogs were there wrestling and just knocked each other. Bonds can act as a buffer against stock market volatility. BND is one of the best bond funds has to offer in terms of cost, yield, and performance. The current 30-day SEC yield is 1.1%. Well, the fund has almost rock bottom annual expense ratio of less than 4 basis points. The fund, which tracks the performance of the Bloomberg U.S. Aggregate Floating Adjusted Index, has a 10-year trailing return of 3.8%. Ryan Scribner, who writes some site called Investing Simple, says the Vanguard total bond market could be a great option for constructing a simple portfolio. This fund works great for the 2 portfolio approach, which you invest in basically a low-fee bond and a low-fee stock fund, okay? Total World Stock Index, all right, VT-WAX. If you're following the 2-fund strategy, VT-WAX could be a solid companion to BND. I'm going to call it that. I haven't really paid much mind to VT-WAX. I typically don't like total equity international stuff, but that might be something to look at. All right, VT-WAX, Total Bond Market Index Fund. Well, what was the Total Bond Market ETF? Oh boy. So we're talking about the fund instead of the ETF. Okay. Total Stock Market VTSAX. Yep, I agree. You know me. VTI or bust, baby. That's me. So VTI, big fan, first time, long time. Target Retirement 2055 Fund. Target funds can be a streamlined approach to retirement investing, which you may appreciate if you're just entering the market. The idea behind target date funds is for investors to use the fund targeting the year they aim to retire. For instance, if you plan to retire on or around 2055, VFFVX may suit your needs. By the numbers, the Vanguard Fund offers 1.61% yield and a low turnover of 8%. The fund's expense ratio is also up 15 basis points and has averaged 10.1% over the last 10 years. Make no call on that. Balanced Index Fund, 60-40 split. I already compared the Balanced Index Fund versus the Wellington. I can't remember if I did or not. We'll come back to that. I'll do that later. A different video. Long-Term Investment Grade Fund, VWESX. All right, so this is going to be a challenge. Let's see, does she talk about duration here? No, how can you not? All right. One final option to consider if you're interested in finding the best funds for retirement is VWESX. The bond fund is designed for those seeking retirement income, invest primarily in high-quality fixed income securities with some medium-quality securities as well. Compared with some of the other bond funds mentioned here, Vanguard's offers one of the best yields at 2.36%. It's also featured an impressive 10-year return of 8.42. As cost goes, a little bit more expensive than other bond funds. Still rates as one of the most cost-effective ways to build a bond portfolio through Vanguard. Okay, this is going to make me mad that they don't talk about duration. Let's see, they say 8. Well, they got other things in here. Okay, and there you go. 7 of the best funds I don't know how you don't talk about duration, man. All right, so we can come back to this. So let's look at. We're going to go to Market Watch. Oh shoot, let's just go to Vanguard itself. We'll go to the horse's mouth. Hey, Pablo, Pablo. Hey, 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 boys. All right, so let's go to personal boys. All right, we're going to go to. Right, pause so I can get my boys to be quiet. Hey. That keeps you awake when I yell like that. You know that, right? You're like, oh, well, I was sleeping on Josh. Now I'm awake. All right, so here's a long-term investment grade fund. And the first thing we're going to do is find the duration. And I'll tell you why that is here in just a second. Right? Ooh. 15.3 years. So let's see what this fund has done since we've had a little bit of an increase in interest rates here on the price per share. And I'll explain duration here in just a second. What's that? VWESX. VWESX. All right, so that guy. Let's go. Oops. Let's go to the last 3 months. Yeah. Look. So let me show you something, my friends. All right. So this right here, over here, right there. That's the price drop you see. It's gone from 12.23 to 11.58 in the course of oh man, we can just go back to 1 month. Yeah, so basically the course of a month's time is down from 12.23 to 11.58. So let's take our trusty calculator and we go to 12.23 minus 11.58 divided by 12.23. That's a 5.3% decline in NAV, net asset value. And the reason for that is simple. Right here was the duration. All right, so where was it right there? What the duration means that for every increase in interest rates by 1%, the price of this fund will drop by 15.3%. All right, so if the interest rates go up by 1%, the price will drop by 15.3%. Does that make sense? If you're only getting 2.4, well, that's not even the yield to maturity. What's their 30-day SEC yield right now? Come here, buddy. 2.36. So if you're only getting 2.36 and you have a 15% decline potential for an increase in interest rates by 1%, I just don't see the benefit there. I just don't, man. That's way too much risk for hardly any yield at all. I mean, you might as well just be in the stocks and get the dividend off Wellesley, for instance, or something like that. I mean, my goodness, that's significant downside risk for no upside at all, other than basically an income of 2.36. I mean, that's stock like risk there. So I don't like that at all. Let's compare. Let's go. We're going to compare the VBLAX, and we're going to compare that to VBLAX, right? Balance fund. And we're going to compare that to VWELX. All right, let's go back here. And we're going to analyze portfolio. Unknown V. What was the Vanguard Balance Index Fund? What is that? Hold on just a second. We'll pause for a second. We're going to compare the Wellington versus VBIAX. We'll go back to inception here. If it goes back that far, how far does it go back to January 2001? So that's good. So we're going to start with January 2001. Wellington versus VBIAX, and what is what? So portfolio 2 has smoked VBIAX, which is Wellington. All right, so Wellington has just smoked it. I mean, not even close. Look at that. 100,000 invested in Wellington is worth 422 today. 100,000 invested in VBIAX is worth 336 after 20 years experience. So that's enough to see right there. Similar upside. Wellington had a little bit better upside, almost identical downside. Similar max drawdowns. Just Wellington smoked it. No other way around that. Look at that. Yeah. All right. So let's see. Full 7.88 in Wellington versus 6.59 in the other. I guess my boys are chewing something, so I'm gonna get out of here. Anyway. Those assessed 7 best retirement funds from Vanguard. I disagree with that, but I'd like to hear your thoughts. See ya.